Morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart here, and what we're seeing now is we saw the breakdown from the tight Bollinger Bands. Okay, we saw a couple big days down, then we were looking for a rally, ideally back to the 50-day exponential moving average, but all we could do was basically a sloppy test of the weekly pivot, and then yesterday, was a fairly steady down day, fueled by news out of Russia, Ukraine with respect to what's going on along the border there. We saw some further weakness in the overnight, and we've traded as low as 1903. This remains very similar to the lower band ride in January of 2014, where we saw a move down, a small rally, and then another leg down. So the Bollinger Bandwidth is at 4.67. Our target all along, since before a break, since we were at 1.5, has been at 5 or above. At 5 or above, the bands tend historically to start to allow for a meaningful bounce back up. So I'm looking for further downside. Any rallies are still remain, we're ultimately in sell the rallies mode. We were long a few times yesterday. We did very well long, actually. And we were stopped out on the runners at free ride. I mean, what we do is we get long, we take some profit, we take some more profit, but as soon as we take that initial profit, we either go even stop or, a tick or two above to get into free ride. At that point, we've already got a swing short going, okay? So we're not missing out on any downside if we continue to go lower. But when we scalp the longs, that way our risk is out and it can do what it wants. What you don't want to do is start round-tripping longs in a downtrending market because you'll end up holding stuff into oblivion. There have been people that have been fighting this since 52, and that's just not the way to do it. You've seen the weekly pivot. You saw it fail last week after FOMC up at 1972. You saw it fail this week up at 1936 and change, 36.37. So the comment I made in the room after the Ukraine news came out was that this is a market that wants to trade lower. First time I've said that in years. This market wants to trade lower. If that news comes out 6 months or a year ago, we trade down initially off the news, and then they bounce it, they rip it, and we close higher than we were when the news came out. We saw it a million times. Now you're seeing the market trade down off of bad news and stay down. So underneath the surface here, you're seeing a shift in the dynamic of the market. Not saying that we're shifting to a full-blown bear market, but I think what we are absolutely shifting to is something more two-sided than what we've been used to in the last 18 to 24 months. So let's see what happens today. Remember the rule of band rides, of lower band rides. They are morning highs that die. Morning high died yesterday. I would expect some kind of a rally off of the regular trading open. If we're going to do further downside today, that pop off of the open should fail, and we should make new lows below 1903. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. It's a great time to start because we've got a very large crop of trials right now, and they're all learning together, and there's just a great bunch of people in here, and we love to meet you. And if you do this every day, I feel very confident that we can help your trading. All right, have a great one. Be back tomorrow morning with another webcast. Trade them well.